The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Larry Pesavento.
Okay, good afternoon, folks, and we'll start the show. As you know, when I first get up in the morning, which is pretty early here in Arizona, I check to see what's happening on Bloomberg or CNBC. Usually, it's Bloomberg that I check on, and they were saying that the hold on 1 second. I have to check something. I need to see. I wanted to. My wife Sarah wanted me to. I asked her to check to see if this is the year of the horse in China, which symbolizes power and also strength. And so this is going to be interesting. We have the new moon coming up on the 30th of January. That'll be Friday, and that will be the start of the year of the horse. That's a 1 year. That's a 1 week holiday all across Chinese. That's their biggest, one of their biggest holidays of the year, along with the May holiday that they have. But last year was the year of the snake, and this year is the year of the horse, starting on this coming Friday. Now their calendar goes back far, thousands of years more than ours. It goes back to 4000 BC, so it goes back a little deeper. But anyway, go on to the next thing. Anyway, we've broken some serious support, as most of you can see. We've had a little minor rally last night, and now we're going below the lows that we made on Friday. As Basil mentioned, this looks a little more serious than you might take it original look at it, because we're having these really long-ranging bar that we had on Friday, and this is only the second. This is actually the third down day for the NASDAQ, and only the second down day for the IBB, the biotech index. So this could be considerable. Now remember, we've talked about the margin debt being as high as it's been in 1929, and that could be the that could be the instrument of why this could be happening. Folks, I posted into the Tiger TV today the chart of the Chinese stock market, the FXI, which is the good ETF for the Chinese market. And as you can see, it has some beautiful ABCD patterns, just as clear as a bell. I mean, they're just beautiful patterns. We went up just recently, about 5 or 6 weeks ago. We were up around the 786 level, and now we've broken down badly. We had a really bad day on Friday, and this is what part of the reason they're saying on Wall Street is what is the cause of this breakdown. Folks, I don't believe that for a minute. I believe it's a combination of a whole lot of things. It's not just one thing. I mean, we've had currency problems in places like Turkey and Argentina and several other countries. We've had some pretty wild swings in the British pound. The Australian dollar might even be making a major low down in here. So there's a lot of, a lot of conflicting things back and forth. And so if you just look at the charts, and that'll give you a hint that yes, this looks like it might be, something that could give us a correction. Now realize we've not had a correction of 10% in the S&P 500 in 420 days, actually a little more than that right now. So a 10% correction, off the top, what takes you down into the about the 1670 level, which is about 100 points from where we are now. The Dow Jones Industrial Average has just taken out the December lows, which means that everybody that's bought it since December is now underwater, and that's usually not a good thing. So and it's just a question of once market goes down, they go down faster than they go up. That's pretty much the bottom line of what you're looking at when you're following these things. So the first chart, of course, was the Chinese market that we looked at, And the next one that I want to show you is the Dow Jones, because we were looking at this just recently as last week, and the week before that, and the week before that, and the week before that, because we had, the Bradley model had said that the Dow was going to top around December 31st to January 1st, and it did. However, the NASDAQ, it went up another 15% higher, and so did the Russell Index. The New York Stock Exchange Index did not take out that high of December 31st. And at that time, both Basil and I were talking about the fact that we were having, more declining issues than advancing issues on up days. The advancing volume versus declining volume was deteriorating badly. In other words, there was more selling on the downside than there was buying on the upside. All that was telling you that there's a great deal of distribution happening in the market. And now, you see we've come down quite a bit. The 61% retracement of this move, going back to the October low, not just the December low, the October low, that takes us into 15,444, and with these long-ranging bars that we're seeing, it's very, very scary to see something like this. But the one that I wanted to show you, and I'm going to do it in live time because it keeps coming down, and that is the transportation index, because it is the one that really looks like it has had some real serious damage done to it. We had the big ABCD pattern complete up here just last Friday, and just in a matter of a few days we've given up more than almost 10% in this in 2 days, and we're near the low of the day now. Again, we're taking out the January lows. We're at the 786 of the December lows. So with these wide bars down like this, this is telling us that something really dramatic most probably happened in the Dow Jones transportation. And I'm not sure, because this is a very long-term chart. But the thing that could be causing all this is this long-term monthly chart on the Dow Jones transportation going back to 2009. If you'll see the move from 2009 to 2011, April of that year was 25 months up, and then the market corrected down to a 50% correction, and then made a perfect AB equals CD move last week, and that was 25 months up from the July low of 2011. I remember that low very distinctly, because it was in early July. We just had Combust form at that time, and we had a Gartley form in the S&P 500 at the 50% level, and from that level we've had a big move to the upside. So whether this is going to be the factor that is going to cause the Dow Jones transportation to have a real serious correction, because just a normal 50% correction on this would take it down to 5,600. And so all Basil was saying on his show, and what I've been saying all along, is if you're in your 401ks and your other investment accounts where you have some stocks, protect yourself with some stops, because these markets can accelerate to the downside. I can remember 1974 so vividly, because I was on the top of the world at that time on July 28th, and then on October the 17th of that same year, a mere 3.5 months later, the old cowboy was looking at an abyss. Came back from it, but it was not a fun thing to do, and I don't recommend anybody to go through an experience like that. So just be extremely careful if you're in some of these things, and if you've got a stock that's up during this time, for God's sake, don't sell it, because those usually those will rally when the ones that will rally the most. So if I remember 1987 when we had the October crash of that year. On October the 19th, there were only 13 issues that were up in the stock market on that day, and if you would have held those 13 issues, you would have made a great deal of money, because those were the issues that rallied the most. But you can imagine only 13 issues out of almost 1,700. We've never had a day like that since that time, but with 13 issues up, and 1,700, almost 1,700 down on that day of October 1987. I really do not want to go through that again. And folks, I was perfectly prepared coming into that day. I was short the S&P index. They were traded at $500 a point at that time, and I was long bonds. And when the big crash came, everything was falling out of bed, but bonds were only down a half a point. And when the Dow was down, I forget how much it was down, maybe about 500, I believe. No, it wasn't quite that much, maybe about 350. I was afraid that the brokerage companies were not going to make it, and so I liquidated my positions, including my bond position, which I still had a profit in it. But after I did that, the next day the plunge protection team came in, and that was they basically opened the doors to all the banks and say the market stops going down here. Buy all the stock you want. We'll back you on it. And the bonds rallied. Unbelievable 13 points straight up before they let anybody in. It was really an incredible rally. That was the rally that made Paul Tudor Jones very, very well. The crash made him famous, but he was also long bonds on October the 19th and 20th, and that was just having probably one of the greatest spreads ever to be short stocks and long bonds. So that's it. Anyway, that low in 1989 and 1987 was exactly 62% to the tick of the low that we had in August of 1982. That was a big, big low. Just like when we hit the low in 2009, that was a 61% retracement of that same move from 1987. So we've got a long way to go in these markets. We've been up for 5 years, straight up. We'll have a little correction here. We'll see what happens, on the next move, and then we will go on to the next segment of whatever we think these markets are going to do. But we should be in a corrective phase here, at least for a little bit, because of the fact that we're having so much selling these last few days. And if the Dow gets down more than 150 or 200 points today, it's going to accelerate some of these other markets, in my opinion. The Nikkei was down well over 300. The Hang Seng was down almost, that's in Hong Kong, that was down almost 500. And, somebody's going to try to blame somebody else about what's going on in these markets. And it's just a matter of it's a normal thing. Just like when they went up, it was normal. Just like when they come down, it's normal. So don't let them. Got the Dow down about 65, S&P down 11, NASDAQ down 46.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direxion Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direxion Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direxion Shares. To obtain a prospectus or summary prospectus, please contact Direxion Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. Funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Andy Hecht's powerful weekly newsletter, the Technomental Commodity Report, is going up in price again at the end of this month. Andy's weekly newsletter has delivered multiple profitable trades for his subscribers, even including a triple-digit winner within recent months. Right now is a perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy will also be hosting a subscriber event on Thursday, January 30th, Seasonality in Energy and Agricultural Commodities, that you can gain access to by simply signing up for a free trial to Andy Hecht's newsletter, the Technomental Commodity Report. A 30-day free trial to the Technomental Commodity Report, a free 60-minute live online webinar with Andy Hecht, which will be archived, and you lock in the low price of $49 a month should you decide to continue after your 30-day free trial. Offers don't get much better than this. Act now before January is over and this offer passes you by. Sign up for your 30-day free trial to the Technomental Commodity Report today.
Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, back, folks, and we had a request to talk about natural gas. I know it's not a stock or anything, but we still should talk about it. And if anybody's qualified to talk about natural gas, I think it'd certainly be me. Hold on. We take a look here. As you can see, we had a really nice Gartley form way back on the 13th of January. Then the hot weather, the Arctic weather came in, and we went up to the 545 level today. And we have dropped 10% today. We've had pretty much of a key reversal, quite a bit in this today. So it's been a big move to the downside. So we'll keep an eye on this to see what the next retracement will be. On a long-term basis for the natural gas, this thing has been under a great deal of pressure. I'll post that one in here too, also, because it's been a very, very bearish market for a long time. And we've had this huge rally that has just about taken us to the 382 retracement of this move. And so it tells us that at least we've had some type of a rally, and that the product is still viable, because back about 3 or 4 months ago, you couldn't get anybody to even take a position in it just based on the fact that it was so low in price. But that turned around, and You saw what happened from that point. Now, the next chart that I would like to talk about, and I want to spend a little bit more time, with the stock market things, and this is the one that, excuse me, folks, I have to do this chart live. It's the VIX because it's moving up into that area that Basil talked about. So give me 1 second to pull it up, and it should be coming in just a moment. And there it is, and we're almost there. We still got another. We're right at just above the 61% retracement now. So we will be very close. As you can see, we've had a couple of really strong days to the upside, but people are not really fearful in the market yet. If you take a look at this VIX index, you'll see since January it's been in a downtrend. Every time we've had a rally in the VIX, each rally has been lower, and this one is also lower. We're just a little above the 61% retracement of this last move that we had. And so that's telling us that it needs to start to accelerate. Now, whether it'll accelerate tomorrow or the next day, but this is a key week for the stock market, because if we close really badly this week coming into this new moon on January 30th, the 31st, which will be Friday, we will be looking at a big change in trend. What concerns me the most is the fact that it's unison. It's coming across the board. It's hitting everything, folks. It's hitting the transportation. It's now hitting the biotech. It's not, the S&P, the Nasdaq. It's hitting everything, and the reason for that is the fact that we are looking at potential margin call selling. And we've had a tremendous amount of bullishness here, but this bullishness can go away, very, very quickly. If you'll just, I've talked about this many times, because the objective that I've been looking for the long-term VIX index takes us up to the area of around 40, and that's double, where we are now. You can see from this that we've had these lower tops, and Basil mentioned once you get above 20 in the VIX index, you're going to be breaking out of that long-term trend line that's been there for 18 months. And, I'm not a big fan of trend lines, but I know when it breaks those lines, it's breaking Fibonacci numbers, which lead to expansion numbers, and that would get us up to 40. And if it gets really bad, much like we had in, 2008 for some crazy reason, who knows? Maybe Jamie Dimon was going to quit J.P. Morgan because he didn't get a $31 million bonus. He only got a $24 million bonus. Thank God he only lost $19 billion. He could have got, a $100 million bonus. Who knows? Such a deal. I know if I did something like that, I would not be be persona non grata in a whole lot of places. That's for sure. This natural gas, since we've been talking, just dropped another 10 cents. So it's really had a bad move, really big move to the downside. In the currency markets, let's get to the gold market, because I think that's down about 6.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, Nasdaq, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Okay, folks, the next thing we want to take a look at is let's see where we might go from here in this stock market. I posted into the Tiger TV the NASDAQ daily going back for the past several months, and of course you remember that December 31st was the high in the Dow Jones, and it was the high in the S&P and the high in the New York Stock Exchange Index. But as you can see, the NASDAQ went 1.27% higher up into that 3640 level. But what's interesting about this is that when it did that, it was completing the 3 drive to a top pattern that was made popular by H.M. Gartley and William Dunnigan. Dunnigan's work was done 30 years after Mr. Gartley. He basically copied it out of Gartley's book, which Mr. Gartley didn't seem to be upset about because he believed that other people should learn about technical analysis. That's just the way the man was. And he died in 1969. Mr. Gartley did. William Dunnigan died in 77. But anyway, these tops that you're looking at, I've marked them as time, and you can see the time between the high in early December to the high in late December, which was the new moon, was exactly equal to the high that we made on the new moon of December 30th to where we came in last week on the 24th. And as you can see, we've broken down quite a bit. We've taken out the January lows very easily. Now, what I do now is I know that if this is symmetrical, that if we went up in time, we should come down in time. So what I've done is I've measured the move between the high we made on January the 1st or December 31st, and then the low that we had coming down on December 13th, which was a 61% retracement of the low from December. Then the market went up and made a new high. So what's happening now is that we are looking at a market that is scheduled to come down to a low around February the 4th. And February the 4th happens to be a Bradley date. That's the next Bradley date that we have is February 4th. We got our good friend John from Philadelphia snowed in, I'm sure.
Well, I really wish, Larry, I was down visiting you in Tucson today. It'd be lovely to be there.
Me too. Would like to have you. What can I do for you, my friend?
Hey, Larry, it's very timely you're doing your show here and talking about the stock market, and I appreciate you sharing all these ideas that come to your mind. I thought it might be, well, it'd certainly be helpful for me and perhaps the listeners as well to hear some of your thought processes about how you handle trading and short positions if you've got them in the event that this sharp 3-day dive turns into something dramatically worse to the downside. If that happens, can you just share what you'd be thinking, what you'd be doing? Would you be covering short standing aside? It might be helpful just to hear that thought process, please.
Well, I've been watching the main one that I've been trading, of course, has been the Dow Jones E-mini and the S&P E-mini. Those are the ones that I've been looking at. I've had a pretty wide stop on the market. It had to close above 1857 in the S&P. For me to throw in the towel, that meant that the New York Stock Exchange Index would have to, bust into a 1.27 expansion, and of course it didn't do that, and so that gave me a little bit of leeway. My original positions were, I varied them because I didn't sell going up. I sold them going down, but then they reversed and went back up again. So I had some positions on that were underwater, but it was still in the time frame and the equity of what I wanted to risk on the trade, because I felt so strongly that these ABCD patterns that we've seen on everything, along with the butterflies and the Gartleys and everything else, is really significant. And the fact that we had the margin debt, whatever. Anyway, the way I handle it, John, is when it starts to come down, I don't begin to do anything with covering positions. What I watch for is I watch for the first major rally, and that's all I'm looking for. I don't know when it's going to come.
Yeah.
I just know that first rally is going to come, and then after that, I'll be able to assess what I think I should do. Now, I'm in Basil's camp here, that if this thing goes up and goes above 16,600, I should get another job, because that's going to be some type of a monster move that I had not seen before, and I would not know where the market's going after that. But the first thing would be watching a 382 retracement of this move so far. If we were, you're looking at about a 35 point move in the S&P. From the bottom that we've made down there at 67, so that would get you back to about 1800 would be my guess. So any move above 1800 in the S&P, if it happened in 1 or 2 days, would give me a little bit of would scare me. And believe me, the shorts, they don't need a reason to cover, because they've got banged every time this market's come down, so it's not unusual to see a big short covering rally. In fact, I wouldn't even be surprised to see the Dow close unchanged on the day, and maybe even the NASDAQ, and the S&P is only 10 points away, so it doesn't take very much to turn the market. But if it closes on the low, and that's what Basil was talking about, if it closes on the low, that's telling you this selling pressure is not abating. In other words, it's coming down, more and more. If you'll remember Friday's action, with 10 minutes to go, the Dow was down, I think, only 275, and it looked like it was ready to have a little rally, and then in a matter of 10 minutes it was down 315, and that just means there were more selling programs coming in than looking at it. So that's how I try to handle it, and I want to sell, of course, the first ABCD correction that we get in the Dow Jones or the S&P 500. I watch that on the half-hour basis, and when we get an ABCD correction, I will want to do that one for sure.
Very good. That Larry, just hearing you go through that process, I find very helpful. The S&P, and I'm looking at the cash, has just come down. It's just gotten under 1775, and of course that wouldn't be surprising if some sort of very, very short-term low surfaced here, only because that was the nest of the prior swing lows of December, and also was a nest of swing highs from late October, early November. But what I'm thinking out loud about is the issue of the scenario, and this is no forecast, of course, but the scenario that the S&P either today or in the next week or two cascades under 1770. You know, the next major swings that I see are back at those September would be the October low 1650 sort of area, and underneath that you get towards would be the late June lows, that 1560. That 1560 mark on the S&P, the June low, also coincided with that 2007 peak at 1570. So I'm looking at three numbers kind of stick in my head: 1770, 1650, then 1560. My question
they're all close, that's for sure.
My question is, if we cascade down to those levels and blow through, if that kind of unthinkable, really panic sort of situation were to occur, and I'm not speculating it will, I'm just trying to get prepared mentally. But if that were to happen, and I know you're short, would you be covering short, standing aside, saying a few prayers? I'm wondering what you might personally be doing.
I would be adding.
Gotcha.
Yeah, I'd just start adding and then using a close stop, because once selling stop, you remember that greed is a greater emotion than fear.
Yes.
Let's reverse that. Fear is a greater emotion than greed, and once the fear sets in, it gets very, very bad. In 1987, you couldn't even sell because the bid offer spreads were 5-10 points apart. That was $5,000 and $10,000 at that time. So you couldn't do anything.
Right.
But this market, because we got electronic trading, you're probably going to be able to do that, and you can press it, and then you can put a close stop on it, of 8 or 10 points, and do it. But that's what I would be looking at. The other thing, John, is your favorite one of your favorite things that you follow is the Treasury bonds, and we made that 61% retracement up there at that 133 level.
Yes.
And so there was no really flight to quality. All it was a nice little short covering rally so far, and that's all it really was. So it doesn't. There was no panic. I mean, even the VIX has not done very much. It's had a bounce, but there's no panic here. This is just a normal sell-off, and people shouldn't be panicked right now. They'll be panicked if the Dow goes down another 500 points today or tomorrow, or 300 to 500 points today or tomorrow. Then you're going to see you'll see a bigger change.
Exactly. Listen, I thank you so much just for sharing that personal thought process on how you'd handle something that kind of gets out of hand. I find that very helpful just to listen to. So thanks again.
It's my pleasure, and it's always good talking to you, my friend. It's I learn something every time you call in. That's for sure.
Excellent. Great.
You bet. Okay. Bye-bye. Thanks for calling in. John is one of the really backbones of Tiger Financial News, and he also has a news network, and he also is in the Tiger Den and has great information. So that's it. It's really a good thing when he recommends his trading positions. He tells where he puts them on, where he takes them off, and it's very educational. And I recommend anybody that's looking for a chat room to get information that you can't find one any better than the TFNN one that Tom O'Brien has put together, because it's got some great stuff, and that's including the timing of the charts, which gives you the Gartley patterns each day, and that really makes a good thing. That's Gartley patterns on the bear side and Gartley patterns on the bull side. So you get a double increase in education, by using it. So it's fun to be in here because there's so many smart people that it makes it very, very important to do that. See, we've got the Dow Jones now is I believe down about 50. That's come back a little bit, but we're just having a little bit of a bounce, just very similar like we had several hours ago. The close is going to be key today. I believe that's the key thing that we should be watching. And if we close very badly today, that means this is only the third day down. With that long-ranging wide bar that we had on Friday, folks, I don't see a big rally coming until we make some type of a consolidation. Something has happened that has scared somebody. And not only that, it scared everybody. I mean, the hedge funds, all these people are scared. I don't know if they're just acting in unison or whatever it happens to be. You just have to just be really, really careful. Now, the next one I'm going to show you is really a very interesting chart, because it is the chart of gold and silver combined. I put them together so that you can take a look at them. And as you can see, we've had a really nice move in gold last night. We got up to the 1280 level. We backed off about $20, which is normal, trading around 1264 an ounce right now. I still think we're heading up to at least 1300. We might have a pullback. What's interesting here, though, is the divergence that we're having in silver. I mean, silver's had 3 lower highs, and the gold has made higher highs, and that's part of a flight to quality, I guess, if there's something like that. So we'll see. We got a call from Texas. Wayne, are you there?
Yes. Mm-hmm.
What can I do for you, my friend?
I was going to ask you about Apple. They have,
Apple, yes, I have heard about that stock, and I think the earnings are coming out today, I guess, correct?
Yes.
And someone asked me that about 4 o'clock this morning, and I'll see if I still saved everything. No, I don't think I did. I might have put it on hourly. First, let me get the hourly chart up. I think I might have done it on that. I did. So what I'm going to do here is I'm going to post into Tiger TV here, if you get a chance to take a look at this, Wayne. I posted the hourly chart of Apple going back to December, and you can see we've had 3 lower highs. Each one of them stopped at either the 786 or the 61% retracement, and we're in this real tight triangle now. So we've got the earnings coming out today, and the 2 targets. If the earnings are really good, I expect it to hit around 570, and if the earnings are bad, we could see a 515. That would be a 10% drop in Apple. That's what it looks like to me. Somewhere between 530 and 515 would be my guess, because we do have a double bottom to come down around that 530 level. Also, if you hold on a second, I'll stay with us, Wayne. Would you please?
Okay.
Okay. Dow down about 60.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different futures contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now you can receive a 2-week free trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Up next, the Diagnostics Trading Hour with Daryl Martin here on TFNN.
Okay, we're back, folks, and we're talking with Wayne in Texas about Apple. We've got the earnings coming out today, and of course, I think taking precedent over the earnings from what I heard today on Bloomberg was the fact of what's going to happen with the China sales and with the iPhone. So that might be a big surprise. And remember, the Chinese market has gotten hit pretty hard. And if anybody's going to be buying the iPhones, it's higher end consumers that might be, owning stocks. But hey, that's somebody talking that doesn't know anything about fundamentals. But the two prices are $570 on the upside if it's really good, and $530 on the downside if it's not as good as they think. But remember, we have a decidedly bearish market right now for the last 3 days with these heavy sellings, and that anytime something could trigger this to make the selling accelerate, and that could make a big difference in what happens to Apple. I hope that helps.
Okay, thanks.
You bet. Thanks for calling in. Okay, folks, the last thing I wanted to mention is that if you'll get a chance to take a look at the newsletter this week, I've tried to go over the things of where I think what has happened with these longer-term patterns. It looks like they finally kicked in, especially with the transportations and the NASDAQ. and the biotech index, with them dropping that much, that's usually the first shot across the bow that tells you that something different is actually really occurring. All we need now to really confirm this is to see the VIX move above the 20 level. That means it would give it a next objective would be around the 28 to 30 level, and above 38 you'll be looking somewhere around 40 to 50 in the VIX. And believe me, the VIX has been in this long-term downtrend pattern with this trend line for 18 months. So when it breaks out of that trend line at 20 that Basil was talking about, and I mentioned on my show today, that's going to signal something very, very important. We've only got the Dow down, 53 right now. The S&P is only down 9. The Nasdaq's, only down 40. I mean, we talk like these numbers are nothing, but that's still quite a bit if you're long. And of course, if you're short, that's a good thing. So just remember that what goes up does come down, and it's never different. It's always the same. It's just a question of how it's going to, play itself out. In 1987, we topped on August the 25th. We came hard down into the 26th of September. From August 25th into the 26th of September, we came down for a month. Then we rallied 2 weeks from the 26th of September until October the 2nd. And from October the 2nd to October the 19th, the Dow lost 66% of its value. So we don't want that to happen this year to you folks. So protect yourself. If something like this starts to unfold, we'll try to keep an eye on it and see if it's going to. And maybe this is the greatest buying opportunity of all time. I can't say that right now, but right now it looks a little bit bearish to me with these long-ranging bars and the follow-through that we've had. The shock, if it comes, could come from Europe. It could come from the United States. It could come from China. It could come from Russia. It could come from anywhere if there is a shock. And there's the other thing is that this market could just drop of its own weight and nothing's happening. And that's just basically the liquidation of debt because of all the margin debt that's out there. I mean, the bonds have just barely rallied to the 61% retracement. And so there's certainly no flight to quality in bonds. Nobody's scared. The VIX is up, but it's been up this way before 4 other times. It's done nothing. Live every day in an attitude of gratitude and God bless.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days, unconditionally, so there's no risk to you, other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.